Markets are closed, but the business stories are just heating up. Hello, I'm Raine Musñgi. Catch up with us on Business Brief. President Donald Trump is invoking emergency powers to boost the ability of the U.S. to produce critical minerals and potentially coal as part of a broad effort to ramp up the development of domestic natural resources and make the country less reliant on foreign imports. An executive order signed by the president Thursday taps the Defense Production Act as part of an effort to provide financing, loans, and other investment support to domestically process critical materials and rare earth elements. That's according to a White House official. The U.S. International Development Finance Corporation, working with the Defense Department, will provide financing for new mineral production projects. The order, which also encourages faster permitting for mining and processing projects, and a directive for the Interior Department to prioritize mineral production on federal land, comes as a direct response to long-held concerns about the U.S. and allies that China overwhelmingly controls the processing of some of the most important critical minerals.
And moments ago, I also signed an executive order to dramatically increase production of critical minerals and rare earths. It's a big thing in this country. And as you know, we're also signing agreements in various locations to unlock rare earths and minerals and lots of other things all over the world. But in particular, Ukraine, we're doing very well with regard to Ukraine and Russia. And one of the things we are doing is signing a deal very shortly with respect to rare earths with Ukraine, which they have tremendous value in rare earth, and we appreciate that.
Meanwhile, the European Union has delayed its first countermeasures against the United States over President Trump's metals tariffs until mid-April, allowing it to rethink which U.S. goods to hit and offer extra weeks for negotiations. The European Union Commission had proposed reimposing 2018 tariffs on $4.9 billion of U.S. products, followed by hitting a further $19.5 billion in U.S. goods on April 13. The Commission subsequently confirmed all EU countermeasures would take place in mid-April.
And as you know very well, on the 12th of March, the U.S. imposed 25% tariffs on 26 billion of euros of steel and aluminium exports from Europe. Just to put it into the perspective, this is approximately 5% of total EU exports to the United States of America. On top of it, more EU products might be subject to tariffs in the coming days. And I want to be clear that these are unjustified tariffs. These tariffs are harming European companies, workers and citizens. And we all know that the EU is clearly not the source of the problem when it comes to steel and aluminium. The real problem is overcapacity, and this means the way forward should be that Europe and US should cooperate together to tackle the root causes of the overcapacity. And as you know, we are not hesitating to take action in this regard. And you, I'm sure, noticed that yesterday we adopted the new Steel and Metal Action Plan, where the trade policy plays a very instrumental role. We also, of course, continue working on our preparations. On the 2nd of April, we will need to assess the action taken by the US and keep a flexible approach so as to calibrate our response accordingly. In addition to the reciprocal tariffs, the US has launched a Section 232 investigation on copper, wood, again including derivatives, which could lead to additional tariffs or other restrictive measures. We have also been informed that the US is considering measures under Section 301 on shipbuilding that could have also negative effects for EU maritime transport firms. So we are following all these developments very, very closely, and we will again need to be ready to act firmly, swiftly and proportionally if needed.
The first set of countermeasures includes applying a 50% tariff on U.S. bourbon. Trump threatened to slap a 200% tariff on all wines and other alcoholic products coming from the EU if the bloc went ahead with this. The Trump administration is also planning reciprocal tariffs on April 2 to rebalance the global trading system. The Bank of England held interest rates at 4.5% and warned against assumptions that they would be cut over its next few meetings. That's as it grappled with deep uncertainty hanging over the British and world economies, as according to BOE Governor Andrew Bailey. He said the BOE still thought rates were on a gradually declining path, but it would look very closely at how the global and domestic economies are evolving at each of their 6 weekly rate-setting meetings. The Monetary Policy Committee said it is still expected that inflation pressures would continue to ease. The BOE slightly increased its forecast for a peak in inflation this year, which it now put at 3.75% in the third quarter, up slightly from its estimate in February of 3.7%. The British government's imminent tax hike for employers was probably behind price increases in the services sector, the committee said, and it noted surveys suggesting weakness in hiring intentions by businesses. Also on the MPC's radar is Finance Minister Rachel Reeves' budget update speech next Wednesday, in which she's expected to announce cuts to public spending plans, a big component of Britain's economic growth outlook. In Asia, stocks stumbled Friday in the wake of ominous signals from U.S. corporate earnings and a series of central bank meetings. Hong Kong shares faced heavy selling pressure, with a gauge of technology stocks in the city sliding around 3% after a recent rally. Bloomberg reports that shares in mainland China, Indonesia, and Taiwan were also down, although their markets, including Japan, edged higher. U.S. futures were flat. Equity investors in Asia are confronting an increasingly cloudy outlook for the global economy as tariff fears and corporate earnings weigh on sentiment. U.S. President Trump said both broad reciprocal tariffs and certain additional sector-specific tariffs would come into force on April 2, a major risk for the global economy. China's restaurant industry is in crisis, with nearly 3 million catering companies shutting down last year amid a deflationary economy and cutthroat competition. Business owners who bet on a post-pandemic recovery were met instead with reluctant consumers and price wars, with meal prices slashed to as low as 99 yuan or $13 for 4 people. In Beijing, restaurant profits plunged 88% in early 2024, forcing many to close. Used kitchen equipment dealer An Dawei says he and his team dismantled 200 restaurants a month, up 270% from the previous year.
Restaurants that have been operating for more than 5 years made up more than 9% of our collection of closed restaurants. Previously, we had never seen such a high number of long-established restaurants shutting down. This indicates that even experienced restaurant owners, with deep industry knowledge, are still losing money. I believe this reflects a significant decline in consumer spending. People simply aren't dining out as much as before.
This crisis reverberates across Asia, weighing on agricultural exports, food suppliers, and foreign investors relying on China's consumption boom. Experts warn that continued deflation and excessive competition in China could dampen Asian market growth, especially for countries heavily dependent on Chinese demand. A group led by Bill Chisholm, founder of a private equity firm Symphony Technology Group, has agreed to buy the Boston Celtics from the Grousbeck family for $6.1 billion. It's a record for a North American sports franchise. The club's owners, Boston Basketball Partners, said in a statement it had agreed to sell the iconic team to Chisholm this summer. The initial purchase price reported by U.S. media surpasses the $6.05 billion paid for the NFL's Washington Commanders in 2023. The sale of the Celtics, the current NBA champions, still requires the approval of the NBA Board of Governors. You have to pause for a few reminders, but the biggest business stories from around the country and markets closing data are up next. Keep it here on Business Brief, only on the Bilyonaryo News Channel. Welcome back to Business Brief. Ties between the U.S. and the Philippines take on a new aspect. Our reporter Sujin Kim is in Makati City for the signing of the MOUs that will ensure this new collaboration. Sujin, go ahead. Sujin. All right, we seem to have lost Sujin Kim. We'll try to bring her back in a moment. Meanwhile, today marks the first ever National Working Students Day. Our mobile journalist, Ivy Reyes, is in Makati City as well for a whole day of festivities in honor of hard-working students. She joins us on the line. Ivy, go ahead.
Raine, in celebration of the first National Working Students Day, the 130 students here at the Ayala Mall Circuit, most of whom are working students, are currently in a networking session with top employers and industry leaders. Launched by the Mapua Malayan Digital College, or MMDC, way back in 2023, this initiative to honor working students nationwide has now become an avenue for working students to come together and explore career opportunities with MMDC's partners. As of now, a structured networking is on the move with companies like Concentrix, McDonald's, RCPC, Maya, and Telstra, orienting participants on the current trends in the workforce, workplace culture and support, and career development. Later this afternoon is the mixer, or the fun part of celebrating our working students today. As of now, that's all here from the Ayala Mall Circuit. Raine?
From Makati. The Philippines is confronting a significant housing crisis with a backlog estimated at 6.5 million units. That's according to the Department of Human Settlements and Urban Development, or DHSUD. Now, the Subdivision and Housing Developers Association is advocating for a reduction in the extensive permitting process, which currently involves obtaining over 100 signatures and can extend beyond 2 years. SHDA, or SHEDA, First Vice President Arnold Choa, emphasizes that without streamlining the permitting system, housing shortages will continue to escalate. The association is collaborating with the DHSUD and other agencies to expedite approvals.
You actually have to collect around above 100 signatures just to finish your permitting process. That takes way too long. And if you want more housing to be built, we have to simplify and make our development processes efficient.
And we now have our reporter, Sujin Kim, back on the line to tell us about the U.S. and Philippines MOU. Sujin, go ahead.
Yes, Raine, the U.S. and the Philippines are expanding nuclear energy partnerships with education, research, and technology investments. This partnership, formalized through multiple memoranda of understanding, signals a commitment to enhancing energy security and economic development, and will establish fellowships, training programs, and exchange initiatives to equip Filipino students with cutting-edge nuclear expertise. The Mindanao State University will play a crucial role in this endeavor, developing specialized nuclear engineering programs and integrating its curricula with the Philippine Nuclear Research Institute. EOS, together with Valor Atomics and PNRI, is spearheading the development of small modular reactors. These reactors incorporate passive safety features, minimizing the risk of human error or power outages. With a $192 million grant to the Philippine Nuclear Science Foundation, EOS is bolstering critical research in high-temperature gas reactor technologies. With strong private sector participation and government backing, the Philippines is positioning itself as a regional leader in nuclear energy, a move that promises economic growth, clean energy security, and scientific innovation for years to come. And those are latest updates from Makati City. Back to you, Raine.
Thank you so much for that report, Sujin Kim. Filipino alcohol retailers may gain from a potential oversupply of European wines and spirits. The retailer says this is one possibility as the U.S. proposes a 200% tariff on European Union alcohol. Distributors see it as a strong impetus that could push exporters to look to Asia instead. Boozy.ph CEO Andrea Sambar on Bilyonaryo News Channel warns that while UK oversupply could lower prices for mid-tier wines, currency fluctuations and sin tax hikes may offset any price drop.
Well, ultimately, I do believe it's going to be part of the brand owners, right? Whether they do choose to absorb those costs or whether they choose to pass it on to the consumers. I think ultimately we'll have to take a look at how each of the brand players, their stock level and their inventory around the world and how that impacts here in the Philippines.
Okay. Sambar adds that consumers are moving toward premium brands and healthier alcohol with options like tequila, opening new market opportunities for liquor businesses in the Philippines. And this could eventually dictate price direction. Manila's fine dining scene is making waves, but can it finally land its first Michelin star? A top hospitality expert says we're still missing key ingredients. International hospitality consultant Jessa Jastrzemski, who has worked with Michelin-starred restaurants worldwide, says that while Manila has the talent and culinary diversity, logistical hurdles are keeping it from global recognition.
You know, the Michelin Guide looks for consistency and what the chef's identity is and the use of very high quality ingredients. But I think the consistency is very key as well. So the question is, can we consistently or can restaurants consistently receive what they need on a daily basis?
Supply chain issues and the country's archipelagic setup mean that sourcing premium, consistent ingredients remains a struggle. Meanwhile, chefs in Michelin-starred cities like Bangkok and Singapore benefit from better infrastructure and more stable logistics. Jastrzemski also stresses that beyond food, hospitality and storytelling will play a major role in getting Manila on the Michelin map.
People will never forget how you make them feel, right, in a restaurant setting. So I think if you can leverage using AI technology to be able to gather that data and be able to provide that to your team, then I think it's going to be a really powerful tool to be able to hyper-personalize an experience.
Philippine shares fell back into the red below the 6,300 level. The main index gave up close to 0.9% to finish Friday at 62.66, sliding alongside most Asian shares. Decliners dominated advancers 89 to 108, with value turnover reaching a hefty 11.7 billion pesos. Property firms suffered the most decline. We have SM Prime Holdings losing 3.69%, as well as SM Investments Corporation also giving up 1.25%. Ayala Land, meanwhile, gained 0.9%. At the foreign exchange market, the peso is currently trading at 57 pesos and 26 centavos to the US dollar, weaker than Thursday's close of 57.22. And that's a wrap for today's Business Brief. I'm Raine Musñgi. Join us again on Monday as we bring you the stories that help you plan your next big, bold moves in business. Only here on the Bilyonaryo News Channel. Always on time.